Hello and welcome to Cboe Volatility 411 for Friday, January 18th. My name is Dan Deming and I'm with KCAM Financial. Well folks, expiration day today, SPX expiration this morning. We have some expirations rolling out throughout the day in the equity and markets as well. However, it looked like a pretty significant markup this morning, yet we're still seeing the market build on the initial opening, and with that we're seeing the VIX under pressure. VIX down around the 1730 level, getting back down to levels that it has not really attained since this whole move started in early October. I can tell you in this last month, one of the largest decreases in the VIX cash in the last several years, when you see it going from about 35 down to 17, so basically a 50% drop in that VIX cash. And with that, the dynamics in the VIX structure is shifting as well. Now, futures back into contango, or basically we're seeing a nice curve there in those futures, normalized curve, as well as the cash to futures back into contango. So again, you're seeing this whole VIX structure now normalizing, given the fact that we have seen the market being able to continue to build on the bounce from the lows in December. And looking at the activity here, VVIX, measure of implied volatility on the VIX options, that's really under some pressure here. We're seeing, again, VIX options coming under, at least at the money options coming under some pressure. 78 right now. That's really the low for the last year. We have not seen the VVIX at these levels in quite some time. And with that, today, when you see the activity in the VIX, we're seeing actually a fair amount of out-of-the-money call buying going on, particularly in February. Now, February is the lead month in the VIX complex, and with that, we're seeing a lot of out-of-the-money call buying taking place. However, also some puts as well. We're seeing some March puts as trading as well, but really the focus of the volume is to the upside. I think 50,000 of the February 25 calls are traded. That's the big line today, but if you look at all the strikes, all the way up to the 42 halves, you're seeing some activity there in very good size as we close out the week. Next week, we got a 3-day weekend, but then we have next week, we have a shortened week, but nonetheless, we still have earnings that could influence the vol structure. We have later in the week, ECB and Bank of Japan announcements. So again, the market will be focused on that. But primarily right now, we're seeing the SPX continuing to push higher to break through some key technical levels. And with that, the volatility structure is under pressure. The VIX back down to levels basically prior to the big disruption in October. That's your Vol 411 report for Friday. Again, my name is Dan Deming, and thanks for watching.